Information shared on the following program is for general information purposes only. It does not constitute legal, tax, investment, or other advice, nor is it intended to recommend any particular investments, products, or financial instruments. Always seek advice from your financial advisor, attorney, or accountant with regard to investment, legal, or tax questions.
Welcome to the only show in the country dedicated to helping savers worry less about money, the Worry-Free Retirement, with your host, nationally recognized retirement specialist and six-time author and fiduciary, Tony Walker.
In 2002, after already having worked in the financial business for nearly 20 years, something very strange occurred in the financial world. In the years 2000, 2001, and 2002, the stock market dropped like a rock, and so did my confidence in my ability to manage my clients' money. Interesting that at that time of my career, the term I used to describe my way of investing during the late 1990s and into the early 2000s is something I trademarked back then called the Money Manager Program. Now, as the market was in a free fall, it was at that time I realized just how difficult it was to manage other people's money when the stock market wasn't cooperating, especially if those people were in the middle of retirement and depending on that money to be there for the long haul, which is why in 2002, I began the long and difficult task of forging a different way of managing other people's money, a financial trail that I would blaze on my own by using much of my own time and own money, a journey that 20 years later has led to what I believe is the most efficient planning process in the industry, something I call the Worry-Free Retirement. But it pales in comparison to how important another discovery I came up with years ago was, and that is understanding one's financial personality, which is the topic of today's program called Know Thyself. Well, welcome, folks, to the Worry-Free Retirement, and yes, I am that little man in the sweater vest retirement planning specialist and fiduciary, Tony Walker, and before we jump into this, let me introduce to you in the Louisville studios on this February 14th, 2023, America's favorite financial sidekick, Mr. Aaron Orander. Good morning, Aaron.
Hey, good morning to you, sir, and I guess happy Valentine's Day.
Yeah, do men wish each other happy? Is that okay?
I don't know. We were meeting this morning talking about this, and, Derek was like, so you guys got plans for Valentine's Day? And I looked at him, and I was like, well, I guess I'm hanging out with you two yahoos all day because we're working, so, those are my plans.
My mind's telling me no.
Well, I just had a birthday, and our own Gina Tutwiler brought in a chocolate eclair dessert. Did you see that thing down in the refrigerator?
I forgot about it yesterday, but I will not forget about it today.
Oh, man, my favorite son-in-law, Trey, had a piece yesterday. I forgot about it. No, today I will be having. So, be mine, Valentine. I'm going to make Gina my Valentine person. They'll bring in the chocolate eclair. You didn't bring me anything today, Aaron.
No, I did not. Sorry.
All right. Well, this whole thing of knowing thyself, and what I thought we would do, Aaron, is kind of have a little fun with this. So I guess in the financial world, here's the problem with the financial world. There's a lot of problems with it, quite frankly. But one of the problems, Aaron, that I see is they tend to think everybody should be doing exactly the same thing, investing in exactly the same, investments, taking money out at the same time, whatever it is. But no other industry does that. I mean, can you think of another industry that is so cookie cutter? I'm talking about an industry. I'm not talking about like a chicken place that just serves chicken, but an industry that would have only one or two items and expect everybody to do that.
No.
In fact, I think you did some research. I don't know if you have that handy. I think I've still got it over here. Do you have that where I said how many, what I wanted you to look up, do you have that handy where I said, Aaron, look up for me how many different makes and models of automobiles exist?
Okay, yeah, so I Googled that and did a little research, came across a website. So as of the date of recording, February 14th, 2023, currently, so how many different makes and models of automobiles exist? Now, this isn't talking about like, the DeLoreans that, were made and now they're not. This is talking about currently how many are as of this date. So There are 126 different brands of automobiles.
Wow.
Within those 126 brands, there are 6,893 models of cars.
Gosh.
You know, so like a Ford, you know, they have F-150s, F-250s, F-350s.
Yeah.
They have Tauruses. They have whatever, Explorers, you know, whatever. Those are models. There's 6,893 models. And out of all of those models, there's also different engine sizes. Out of those models, there are 29,342 different types of engine variations.
So why, the obvious question and the obvious answer should be, why in the world would the automobile industry create so many different brands, models, and engines? What do they know about the human race?
We're all different. We all want different things.
That's right. So, folks, it is no different with your money. Unfortunately, many of you have been led to believe that there's certainly, there's a one-size-fits-all, as we like to say. So today, get over here back to my notes. Today, what we're going to do is talk to you, first of all, about making sure you understand how we get paid in the financial industry. And let me boil this down real simply, folks, because it is not complicated. When you're working with a financial advisor, when you turn over your money to an advisor or even an institution, we have to get paid. I'm sure everybody would agree with any industry. You got to make money, right, Aaron?
That's
Nobody
right.
has a problem with that. Okay. So you're either going to be charged a fee to handle that money or a commission. Now, big institutions work on something called the spread. We're going to negate that for now. We're just talking about mainly advisors like myself at Tony Walker Financial, or an annuity peddler, or a stockbroker. It doesn't matter. They're going to have to be paid in one or two ways or both, fees or commissions. Now, I want to focus today a lot on this idea of fees. Now, years and years ago, people don't realize this. Let's take the stock brokerage industry where people used to buy stocks and stuff, Aaron. Most of those people worked on a commission basis. You bought a stock, they got a share of the commission, you sold a bond, whatever. It was very normal. And actually, I thought it made sense. If you transacted business, they got paid. But if nothing really happened, they didn't get paid. That would make sense, right?
Right.
Okay, years ago, the industry figured out something. They were very smart on this, and actually, it's turned out to be very profitable for them. They started bashing commissions, telling people that, oh, you don't want to pay a commission, there's conflicts of interest. What you need to do is turn over all your money to what's called a money manager. Now, again, back in the 90s, I managed money. In fact, I even called the program a money manager. But here was their logic or their argument, Aaron. You're going to get better service, just pay a recurring fee. That way you don't have these commissions, you don't have a conflict of interest. In the long run, it's better for you, for the consumer. Well, let's play this out a minute and really talk about this. Now, again, folks, we do charge what's called assets under management, or AUM, a fee. Our fee, though, is very, very competitive. We'll explain more about this as we go on. It's 0.8%, all right? 0.8%. Now, the reason I'm talking about all this know thyself, we mainly work with savers. People know that listen to this radio program. As you can imagine, Aaron, most savers do not like fees. Would you agree with that? They just don't like paying fees.
Right.
A saver does not like fees. Most people don't like fees, but savers really hate fees. So we charge 0.8%. The average money manager out there, depending on the size of the account, from what we could tell, is around 1.25 to all the way up to 2%, which is a lot of money. But let's play this out a minute. There's an ad on TV all the time. I love this ad. These people are great marketers. They talk about how they don't sell commissionable products, okay, like it's a bad thing to sell commissionable products, which it's not, by the way, folks, as long as people disclose the commissions. And they always say, the way we charge fees, you do better when we do, they say, we do better when you do better. That sounds good, doesn't it, Aaron?
Right.
What they don't tell you is we in this industry that charge fees, listen closely, folks, do better even when you do worse.
So they need a new slogan. It's like, we're good either way.
Yeah, they need to tighten up that slogan. So let's see how this works. Okay, so let's say we'll use our fees, which is fine, 0.8%. So let's say someone comes to us and they say, okay, Tony, I want you to manage my money. We're going to give you $100,000. We would put that money with Charles Schwab. Schwab is the custodian. That's where we get all our stocks, bonds, ETFs, mutual funds, bank CDs, etc. Schwab does not offer annuities. We don't get our annuities through Schwab. We get those through other insurance companies. Although I saw, Aaron, where Schwab sells annuities now. You can get them through Schwab. We don't use their annuities, though, folks. We use their platform for their investments. And as well, one of the things we do, which is one reason we like working with Schwab, we look for fees that are very, very low. So we do not, when we query Schwab's website and we're looking for assets for you folks, we're trying to find very low fees through Schwab. In fact, on average, even with Schwab's assets that we select or investments, everybody, total, us and Schwab, is less than 1%, which is very competitive. Okay, but so you give us $100,000, we charge 0.8% a year, so we're going to take $800 every year. Does that make sense, Aaron?
Okay.
We get paid. That's a recurring fee. Not a bad deal when you think about it, because think about us as a money manager. We know that money's coming in every year regardless. Now, Aaron, what would you think if all of a sudden you had that $100,000 with me and it dropped to $80,000? Would you think I would probably not charge a fee since it's down so much?
Yeah, I'd probably subconsciously think like, okay, well, I took a hit, so will he.
So will he, yeah.
Right.
Or maybe since I, maybe just didn't do a great job, maybe not charge anything. I mean, I can't do that. Those are called performance-based fees. But let's back up a minute. Let's say you took your car in to have it worked on. I'm having my car worked on today. And they charged you $2,000, and they said, we got it fixed, Mr. Orender. You drive out of the parking lot, ride down the road, the same problem's happening. You go back, and they say, I'm sorry, tough luck. How would you respond to that?
Yeah, reminds me of your story about your dad, and sometimes you get the bear, and sometimes the bear gets you.
There you go. But, folks, that's how it works. So, yeah, granted, if it drops to $80,000 on paper, we're going to charge less of a fee. It's 0.8% of $80,000, but we still get to charge that next year if it dropped $640. So, folks, these fees are a huge deal. So when I come back, we're going to talk about what you really get for these fees. And if you're a saver and you want to make sure you're getting service above and beyond these fees that you're having to pay us or any other money manager, you're going to want to stay tuned. And this is where Tony Walker Financial really shines in the field of retirement planning. You're listening to The Worry-Free Retirement. I'm Tony Walker. We'll be right back.
Hi, Shannon Ross here with Tony Walker Financial. I'm the Investment Services Coordinator, and today I want to talk to you briefly about our split IRA concept. Split IRA concept was developed by Tony Walker and allows clients to use, enjoy, and protect their money at the least cost to them by putting a portion in annuity products, which is protected from loss, and then putting another portion in a Charles Schwab brokerage account. And the brokerage account can be tailored to suit your specific situation and risk tolerance. And Tony believes in the philosophy, live well, die broke. So he builds the brokerage account into your game plan to use for any liquidity needs that you may have, which allows the annuity time to grow. To learn more about our split IRA concept and to see how our firm might be able to help you be more worry-free during retirement, please reach out to us on our website or give us a call. Thank you.
Are you retired or retiring soon? Do you have a 401k, IRA, thrift savings account, 403b, or lump sum pension that you'd like to move to safer territory? Did you know that all the money you see on your 401k statement isn't really yours? Depending on your overall taxable income, the government has essentially a lien on your 401k that can tax as much as 40% of your money when you go to take it out. Tony Walker calls this the 401k tax tumor. For over 33 years, retirement specialist Tony Walker has helped thousands of savers worry less about money by creating game plans to deal with your tax tumor. Get control of your retirement by controlling the taxes owed on it. Schedule a free meeting to see if you can reduce your tax tumor and provide a guaranteed income you can never outlive. To get started, simply log on to TonyWalkerFinancial.com. That's TonyWalkerFinancial.com.
Tired of the roller coaster ride of the stock market? Let Tony Walker show you how to smooth out the ride with your money. Log on to TonyWalkerFinancial.com and let's get started.
Have you recently retired, been laid off, or offered a pension buyout? Has the company you work for moved, been acquired, or closed its doors forever? And finally, do you have a 401k with a previous employer you'd like to move to safer territory? Then take advantage of this opportunity to move your 401k or lump sum pension to Tony Walker Financial. Let's meet in person to discuss your retirement options. Log on now to TonyWalkerFinancial.com to schedule your free, no obligation appointment. Let us help you today. With the uncertainty of the stock market, now may be the best time to consider moving your 401k to safer territory. To talk to me at no cost or obligation, simply log on to TonyWalkerFinancial.com.
Welcome back, folks, to the Worry-Free Retirement. I am America's favorite financial sidekick, Mr. Aaron Ornder. Just want to remind you of a couple of things. You want to listen to past radio shows, all you got to do is go to SoundCloud.com and in the search bar, type in the Worry-Free Retirement. If you want to watch past TV shows, we can cover you there. All you got to do is go to YouTube.com. That's YouTube.com. And in there, type in Tony Walker Financial, and you'll see Tony's smiling face. Now, a couple of things I want to remind you of. We are back on social media. We were on social media a couple years ago, took a little bit of a break. Now we're back on there. So, if you want to find us on Facebook, all you got to do is go to Facebook.com, type in The Worry-Free Retirement. That's 3 different words. If you want to find us on Instagram, go to Instagram and type in @ The Worry-Free Retirement. That's all one word. Okay? Tony, I'm going to toss it back to you.
Okay, thank you, Aaron. All right, so the theme is know thyself, and assuming you're a saver and you're someone that is not that crazy about fees, but you're okay paying fees if you're getting wonderful services in exchange. Oh, by the way, Aaron, you know I'm a big Disney fan. Me and my wife Susan like to go down there. That place is changing. They are starting to take away a lot of services that they used to offer for free. One of the biggies is they used to have a bus you could take, the Disney Express, from the airport to the different resorts there at Disney. Then, man, they just cut that out. Oh, it's annual passes. I don't think they're going to issue those anymore. I'm not getting on Disney. I'm just saying, though, the prices there are going up. It's expensive, but services have gone down. Were you getting ready to say something?
I just, when we were talking about this theme of know thyself, I had a really funny example that had to do with Disney World. So I'll make this quick. So when I was about 10 or so, back in, I think it was 1990, 91, somewhere around there, my mom, brother, sister, and myself, we all went to Disney World for my mom's 40th birthday. And Tony, I haven't been in a while, so I ask you, do they still have the roller coaster Space Mountain?
Yeah.
Do they still have that? All right.
Yeah.
Well, this is the first time I'd ever been to Disney. Now, correct me if I'm wrong. Space Mountain is a roller coaster that isn't it inside?
Mm-hmm.
Am I remembering that correctly?
All right. I don't do well in that one.
Okay.
Yes.
All right.
Ooh.
Well, when you're walking around an amusement park, you can actually see the roller coasters and your brain kind of judges like, okay, I can handle that, or no, I'm not doing that. Well, here was this big open building and you just hear screams coming from it. And I was 10 years old and I thought, nope, I'm not doing that. I'm not doing that. And it got time for us to kind of get in line, and I just, talking about knowing thyself, I just knew. I was like, I'm not getting on this thing. And I didn't. My mom ended up sitting with me on the bench while my brother and sister went and rode it. But, I didn't freak out. I didn't throw a fit. I just was looking at my mom, and I was like, I'm not riding this.
And speaking of roller coasters, that's a good analogy. A lot of savers sometimes, you all need to understand, if you really don't like the ups and downs of the stock market, like Aaron, you better not go in there and jump on that roller coaster.
Well, I ended up riding it a couple of years later when I went back. But at the time when I was 10, I wasn't ready for it.
That's right.
And I knew it. I was like, no, I'm not going to that building with screaming people. No, I'm not doing it.
And the converse is true. As people get older, maybe we see that a lot, Aaron. People have been comfortable with the roller coaster ride of the stock market while they're working. They get into retirement, and same thing, they don't have the stomach for it, nor, which is what I found in 2000 through 2002, man, if that stock market's careening downhill and you're trying to take out money, it's a disaster. Okay, got to move on here. So we're talking about a saver willing to possibly pay fees to me or another advisor. Now, most money managers, here's our primary role. This is what most money managers charge you for. Okay, they're going to select the investments. Hopefully, they're going to monitor those investments and do what's called rebalancing, keeping those in check with the original, what's called risk profile. That's what most people go through. So you might meet with an advisor. They try to determine how much risk you're willing to take. I'd be like, Aaron, if you went to Disney World, there's 3 different roller coasters. One's the kiddie ride, bigger one, and then a gargantuan. They're trying to figure out which roller coaster to put you on so it's not too scary. How's that? Okay. So then they make sure to operate, pick up everything, get everything going, and monitor it and charge fees. But really, that's about where it stops. Like we said earlier, if that thing plummets in value, all they can tell you is, well, you got to hang in there. Sorry, that's just how the market goes. We don't take that approach at all. First of all, we don't put all of your money in the market. That's why I created something called the split IRA concept. While we might have some money in the market, if you so choose, the good portion of it is going to be in things like CDs, which are paying really well right now, very secure, fixed annuities, fixed indexed annuities, mailbox money, government bonds, things that are very, very secure and more predictable. Okay, so that's more the products we tend to lean towards. Now, with that said, the money that's with Charles Schwab, we charge 0.8%. Let me just read off for you. I've got a list of things. The wonderful staff I have. Now we're up to, I think, 15 full-time employees, and all of this staff, again, none of these people are on commission. All they're there to do is service what I sell. They're there to help make sure we provide the services that I would hope you would expect from anybody charging a fee. Listen to some of these services we offer. And again, Aaron, there's no additional out-of-pocket cost for any of these. All right?
Okay.
Our staff will calculate every year your RMD calculations. The RMD, required minimum distribution, that's what you would take when you turn now. It's 73, by the way. They've pushed that age back to 73. That's the new required minimum distribution age. We calculate all those at no cost. If you're thinking about a Roth conversion, that's where you take an existing IRA, pay the tax now, and make that money tax-free forever. We'll do those calculations at no cost to see if it fits your situation. Here's another one, income plan analysis. We are the only ones in the country that have this proprietary worry-free retirement software. I know that because I had it created and I own it. And if you are a client of ours and you want to update and go through that again, we will update that for you at no additional cost. Tax planning analysis, this is a biggie. A lot of people, when they take out distributions, it's funny, Aaron, right before we went on, we have an email that came in, someone who's seen the show, the TV show. They want to meet, but they're thinking about pulling out a bunch of money out of their 401k and paying off their house. Now, that's a big decision. We're not saying they shouldn't do it, but they better understand the taxes. For no cost, we would calculate the taxes involved in taking that money out to pay off the house.
Oh, there's taxes on that? You can't pull that money out and it's all yours? What?
Yeah, afraid you got a friend in Washington on that deal, folks. Yeah, don't forget, folks, if you've got a 401k, whatever it shows the value at, you can take out about 20 to 30% off that and hand that over to Uncle Sam. That is not all your money. Okay, we also do what's called distribution and cash raises. A lot of people don't do this. We make sure to sell the shares that you need when you need it to raise cash so we can get you the distributions. I think we distributed like close to 15 million last year, Aaron, of our existing assets to our clients. That's a lot of money we pour back, and we do all the cash raises at no cost. There's no transaction cost with Schwab to do any of this. Investment risk analysis. Some of you might be out there with a 401k. You have no clue what to pick. Wes Walker, my favorite nephew, would be happy to run a risk analysis for you. Based on your current 401k, we do have to have all the investment selections and try to help you determine what's more appropriate for you. That's no charge. Unlimited meetings with myself or one of the other fiduciaries. Now, this is highly unusual. A lot of times people will charge a planning fee or an annual planning fee. You can meet with myself as many times as you want. I had someone that finally did business, Aaron. They've been in this office. They just decided to do business their 5th time in the office before they decided.
I was going to ask you, is there like a record you have of like, oh, I met with somebody 9 times before?
I bet Shanna could look up all my appointments. Now, it's probably been more than that. Somebody is coming to mind. I won't name their name. I think we met 7 times before they decided. But my point is there's no cost for that. And then once they become a client, they still have access to me or the salaried fiduciaries at no cost. Again, that's a wonderful benefit. What about keeping up with beneficiaries and all the forms required that companies require to change beneficiaries? We will help with all of that paperwork, which can be daunting for a lot of people at no cost. Oh, here's a biggie. I had to meet with 2 adult children of one of my clients who passed away recently. Last year, we had over 35 clients pass away. Already, we're probably going to exceed that number. It's unfortunate, but we have so many retirees at Tony Walker Financial. We will help any of the investments or annuities we've written. We will meet with the beneficiaries. Most people do not do this, and actually assist them in filling out the paperwork if they want us to help them. So that's a service we provide free of charge. Let's see if there's anything else I can think of. Well, I think that's enough, don't you? I mean, it's a lot.
That's a lot.
So if you're a saver, first of all, you have to understand who you are, how you're hardwired, and again, make sure the advisor is providing plenty of services. And you might be saying, Tony, this makes complete sense, but how do I know if I'm a saver? Well, there's where we can really help. So, and Aaron, you know I graduated from Western Kentucky University years ago. One of my degrees was in psychology, so I love psychology. I almost pursued a career in therapy. I wanted to be a therapist, kind of a financial therapist, I guess, if you will. You know, I think I'm pretty good at listening to people and figuring out how to help them. But basically, what I did about 15 years ago, as I saw all these people with all these cookie cutter investments in the financial world telling them to just do this and don't look at all these other products. I mean, there's so much one size fits all out there. I thought, wait a minute. You know, again, as we talked earlier, nobody in the industry does this. There's hundreds of different restaurants, hundreds of different types of foods, thousands of different makes and models of cars. But in the financial world, apparently you're supposed to just do what they tell you to do and buy this or that product. So what I did, I went back to Western Kentucky University, contracted with a few of the professors in the psychology department, and we created something. It is very scientific. We created something called the 3 personalities of money. So if you want to take this free 5-minute quiz, folks, this will help you determine your predominant financial personality. You're either going to be predominantly a saver, investor, or speculator. If you're predominantly a saver, we want to talk to you. That's who we work with. We do not work with investors and speculators. So if you'd like to take this free quiz, it only takes about 5 minutes. All you do, it's the number 3, 3personalities.com. 3personalities.com. If it pops up and shows you're predominantly a saver and you want to talk to me at no cost or obligation, all you got to do is log on to TonyWalkerFinancial.com, click on the Let's Get Started, or you can call us at 270-843-9380, 270-843-9380, and just tell them you want to set up the 10-minute free fiduciary phone call with myself or one of our salaried fiduciaries. And then, if it looks like we can help you, we will be happy to meet with you in person at either our Bowling Green, Louisville, or Lexington, Kentucky offices. So in our time remaining, let me explain to you the 5th step of our process. This is where I'm leading up to, and what savers really love is making sure someone is watching over their accounts. You know, most savers admit, Tony, I don't know a lot about this financial world. I don't know anything about retirement. I'm relying on you guys to stay on course with this, keep a track of what I'm doing. We have something called the Monitor Your Progress worksheet that our staff uses. And boy, as Shannon Ross says, it's a
humdinger.
So here's how it works. If you're a client of Tony Walker Financial, at least once a year, we're going to look at your income plan, compare it to your current account values to make sure you're on track. Recently, Aaron, we had a gentleman, he even sent us an email thanking us for this. We had sent a letter to him, reminded him he's on track, everything's good to go, let us know if he has any questions. And he basically just said, thank you for monitoring this and keeping me on track. So folks, if that's you right now, if you feel like you're kind of like a financial ball in high weeds and nobody's really paying attention to you, especially now that they got your money, maybe you just want a free second opinion from a trained fiduciary that's been doing this nearly 40 years, why don't you do this right now? Why don't you log on to TonyWalkerFinancial.com, just click on that Let's Get Started button, or you can give us a call at 270-843-9380. That's 270-843-9380. If it warrants, myself or one of our trained fiduciaries will be happy to meet with you at either our Bowling Green, Louisville, or Lexington, Kentucky offices. Well, that's all the time we have today. But you remember, between now and next week when we talk, if all else fails, you be worry-free. Make it a good one.